Hello everyone, welcome to the Ichimoku four-hourly analysis for the Aussie dollar, US dollar FX for Thursday, February the 24th, 2011. Well, we have a bullish market here overall. We've had a breakout up above the cloud with this fairly bullish candle, which is a bullish signal with Ichimoku charts. And we've had some very small green-bodied trading in the final session, disregarding the current candle, the last candle here, which is still trading at the moment, incomplete and won't be complete for quite some time. If we look at this candle, it's a doji-type candle, and that's a candle that's very indecisive. We actually did have a change of trend from the upside. We had a series of candles making higher highs and higher lows, and for that final hour of 4 hours of trading, we had the market making a lower high and a lower low. Now, the low of that candle actually tested the top of the Ichimoku cloud, and we'd expect to find support there, and that's exactly what we saw. We saw buyers coming in, but by the same token, in the previous two sessions, we saw sellers coming in as the market attempted to trade up to 1012, around this level, where we saw previous resistance, and up to 101.04. And a very big area of price rejection here. We can see previously this area was an area of support previously, and then very strong rejection away from that area. Now we're having the market trading within that area and being sold off as well, and especially when the market's extending up to around the 101.3, 101.4 area. Now the market, besides having an overall positive bias by trading above the cloud, also has an overall positive bias in the medium-term and fast-term timeframes by trading above the Kijun-sen and the Tenkan-sen. Unfortunately, though, both of those indicators have turned flat, which represents not too solid trending action, and it represents this indecisive action that we've seen in this final 4 hours, and previous retracement back towards the mean as represented by the Kijun-sen here. So there is a likelihood that the market may come back and test around the Kijun-sen again, which is trading at around 1006. Now, if the market does come off and interact with that area, we do have a very thin part of the cloud there, so there is a possibility that we might see the market trade down through the cloud again. So technically, that would be a bearish signal for this market if we did trade down through there. A lot of indecisive trading down below there, down to 1002, and we can see here that we had a lot of shadows on the tops of these candles, which represented downside price rejection, and we know that resistance can turn into support, so we could see a fairly large area of potential support for this market. Certainly good support down around just below the $1 level, the round number, and extending down to around 99.80 and down to around 99.67. So for the next trading sessions, we do need to watch down around the 1006 level for potential support offered at the cloud, but certainly watch up around the 101 and 1012 levels for potential resistance.